Hey, this is Robert. Daniel will be giving everyone a couple more minutes to log in, so just please hold on. Thanks. Still have people logging in, so let's give it another minute. Thanks. It looks like the logins have slowed down. It's about 2 minutes after, so I guess we'll go ahead and get started. Thank you, everyone, for attending Regulatory Edge, the keys to saving millions in the evolving EU market. This is a very interesting space. We hope to be providing you today with some very interesting and practical advice to address all the issues that are coming up in the evolving EU market and in AML. Very quickly, I'll introduce myself and have each one of the speakers do a very quick introductions of itself, and then we'll jump into the content. Again, my name is Robert Daniel. I'm a Senior Director of Financial Services SME with Integreon. I spent 25 years at Bank of America, 10 in the regulatory inquiries and the discovery space, where for literally a decade, we almost always had some type of AML inquiry, investigation, or litigation going on. So I saw it on the front lines of how a large company, was constantly having to address AML issues. I'm now at Integreon, an alternative legal service provider, helping legal and compliance clients solve problems, and we have a financial supplier qualification system certification for our EU and UK clients. Robert?
Hi, I'm Robert Courtnidge. I was a lawyer specializing in payments since my early days at Citibank and Diners Club in the 1990s. And then I was in a number of law firms as a partner, and then stepped back in 2018. My main role now is working with the UK Payments Association, working on their government and legal relations. So working with UK government, working with Bank of England, and working with the regulators like the Financial Conduct Authority. Thank you.
Miguel?
My name is Miguel Corbacho. I'm currently a legal counsel specialized in financial regulations in Amadeus. Before joining Amadeus, I worked for ANO for almost 7 years in the financial regulation department. And before joining ANO, I worked also for BBVA, the second largest bank in Spain, and also in KPMG in the law firm, also in the financial regulation department, specialized in payment, legal payments, credit institutions, regulations, asset managers, and also in M&A.
And McCallum?
I am Michaela Spiro. I'm a senior legal counsel for competition and regulatory affairs at Amadeus IT Group, together with Miguel. And I previously worked in large international law firms focusing on competition law. So I'm not a payments expert, but rather taking care of Amadeus's regulatory tracking and compliance. So looking forward to learning from our panelists today and also speaking to you a bit about best practices for tracking and compliance with regulatory obligations.
Thank you. Okay, so we'll transition to the first page, please. I'm just going to quickly discuss some of the large fines that we've seen here in the last 18 months. It doesn't take long to search, Google search large AML fines 2023, 24, and they just pop up. So what I've done is looked at some of those large ones and really tried to dig into the settlements, what the regulators said they found, and some of the root causes. And it really breaks down into the real tried and true people, process, and technology. If companies are not, focusing on all three of those in their compliance efforts, not having enough people, not having the right people, not constantly updating your processes and procedures, keeping your technology current, getting the right technology in-house to comply, a breakdown in any one of these can cause significant, very significant fines. So just breaking down a few that have happened here again recently. On the people side, a large Canadian bank had to pay a very huge fine. And this is a quote from the regulators. It starved its compliance program of the resources needed to obey the law. That's very significant. And they had to pay a very high price for that non-compliance and not giving the compliance department enough people. So you can look at what was the root cause, probably budget cuts. And, we all see those in all our companies. But when you try to cut in this area, it can cost you 10, 50, 100 times more in fines. And this bank had been fined previously on some of the same things. So when the regulators came back a few years later and found the same problems, the fines went astronomical. On the process side, there was a $20 million fine, $29 million fine in 2023 of a UK bank. And the quote was, the financial sanction screening controls were shockingly lax. It left their system wide open for criminals that were subject to sanctions. And if you dig through in even more detail, and it sounded like they had technology, but they had not updated it. As the regulations and sanctions individuals changed. Sounds basic, but it was not built in their process to constantly look to change those processes as the regulations changed. There was a $2.4 million European wealth management company that had controls across a wide range of areas, did not keep pace with the growth of their company. So great company growing quickly, but they didn't change their people, process, or technology as fast as they were growing. And when the regulators came in, due to the volumes they had, they didn't have the people in the process and the technology to keep up, and another large fine. On the technology side, a large US bank, the regulators found that even their internal audit group had criticized and written up the compliance department for not having enough technology, and it was not being kept current. So even the internal audit team had found issues, and the company did not comply. More than likely, again, it was budget cuts and not feeling like they had enough money to invest in the area, and now they're going to pay a fine. In the U.S. bank, it was astronomical. But again, looking at the budgets, and if anybody's having problems with budgets, do some research and show the people who are pushing back on giving you budget the really true cost of not supplying the compliance department with the right people, process, and technology to do their job. And these are just a few examples. You can find them, plug in a country and an AML fine, and you can find these and look down into the detail of what the regulators said, and you can find out what they found. I know at Bank of America, when we saw a a large fine against another bank, we knew within a quarter or two, the regulators are going to come to us and say, hey, prove you didn't do this as well. So when you see some of these large fines, take a look at them, look at your own processes and procedures and see if you have that type of issue and maybe use that to get some of the funding you need to have your company in compliance. So with that, now we're going to lead into Miguel into some more specific regulations that are coming up in the EU and how they are addressing them.
Thank you very much, Robert. Well, now from our perspective, and in particular from the IMAN institution that Amadeus has here in Spain, we're following closely to both the PSD3 and the PSR1. And how this will impact our business and also in other competitors as credit institutions providing payment services and also other IMAN institutions and payment service providers. Please note that these pieces of regulation are still in draft, and therefore we can expect some changes from the current draft of both the payment service directive and on the PSR one as a regulation. So if we can move to next slide to talk about a little bit of the transition from PSD2 to PSD3. Yeah, we can move a little bit more. Yeah. So talking about the transition from PSD2 and PSD3, we currently have two directives which apply to IMAN institutions. We have the PSD2 as implemented in Spain and in other countries from the EU, and the IMAN directive as implemented also in other countries. The implementation of the IMAN directive, at least in Spain, cross-refers to both the rules applying to payment institutions and also to the rules on payment institutions and credit institutions. So the purpose of the new directive and the new regulation is to harmonize both regimes and merge the rules applying to IMAN institutions and to payment service providers. Both the PSD3 and the PSR1 were created in June 2023. So we can move to the next slide. Yeah. The PSD3 and the PSR1 were created in June 2023, and the final text is expected by the end of this year. Taking into account that we're in December, we don't expect the final text until early 2025. And the difference between directives and regulation, as we all know, is the fact that the directive needs to be implemented into national legislation and allows certain discretionality in the implementation, and regulations apply directly without the need for implementation in its member state. The PSD is expected to start applying once implemented by mid-2026, and the PSR1 will be applicable 18 months after entering into force. Although the directive and the regulation will be the most important pieces of legislation, both need to be further developed, both at a new level and also in a national level. So if we can move to the next slide. Yeah. From my EU perspective, this will be developed through regulatory technical standards, Q&As, and guidelines. And in a national, from a national level perspective, here we have the example in Spain. This will be implemented by a law, regulation, and ministerial order, and also the Bank of Spain, as for example the FCA in the UK and any other regulators within the EU will need also to develop the legislation through circulars, Q&As, and guidelines. Can we move to the next slide? Yeah, next one. Yeah, the one before. Yeah. One of the most important things the PSD3 brings is the reapplication process. PSD3 creates a new licensing regime for payment institutions. The Commission text suggests that existing payment institutions and IMAN institutions must apply for a new license under PSD3. Also, although transitional measures may apply, so existing license for payment institutions and IMAN institutions are only valid under the new regime for a limited period. To benefit from transitional arrangements, firms have 24 months from when the PSD3 enters into force to submit all relevant information to demonstrate their compliance with the new regime. In its final, in the draft text, the Parliament wants to clarify this transitional arrangement, and it also suggests giving regulators the option of extending the transitional period where more time is needed to process firms' applications. Firms may be granted authorization automatically if the regulators already have evidence that the relevant requirements are met. Firms need to carefully consider the differences in detail between the PSD2 and PSD3 authorization regimes, such as the changes to initial capital, own funds requirements, as well as the new requirement for a winding up plan, which we think it's going to be similar to the one applying to great institutions. But I mean, I think the requirements will be softer than the ones applying for great institutions. With regards to the winding up plan, this is one of the more significant changes to authorization requirements under PSD3. This plan must be included in the documentation firms must submit to a regulator when applying for authorization. And this plan should set out what would happen in the event of the institution's failure, including continuity or recovery of critical activities performed by third parties, such as agents. Of course, the plan should be proportionate to the firm's size and business model. On the safeguarding, which is a requirement that we already have, this is one of the more complex areas of compliance for payment institutions. The PSD3 largely leaves the requirements of safeguarding unchanged, but there are three important changes to take into account. Payment institutions must avoid concentration risks to safeguarded funds by not depositing all funds with one bank. And as an alternative to holding safeguarded funds with a credit institution under PSD3, firms may hold these funds with a central bank if the national legislation offers the option to do so. And firms must notify their national regulator in advance of any material change to their safeguarding process. So on next slide, I will briefly talk about the main technical news. There are three main technical changes in this new picture. New specific API for account service and payment initiation service providers, the permission dashboard for users, and the obligations to implement stronger mechanisms to supervise fraud, particularly related to strong customer authentication. In that sense, in connection with the new specific API for account services and payment initiation services providers, as you know, in the provision of account services and payment initiation services, it exists data interchange, and the regulator wants to protect that specific data interchange by imposing the obligation to the account manager service provider offering an online payment account will need to have at least one specific API for that data interchange from where the account service and payment initiation service will connect. On top of the main obligations, that API needs to comply with certain technical standards, and the PSP account manager will need to publish statistics regarding or related to the availability and performance of that API. On the permission dashboard, the purpose of this permission dashboard is that the user can control and manage any permissions given to other payment service provider, particularly to account service and payment initiation service. This is an obligation applicable for the account manager service provided, which we will be obligated to integrate this permission dashboard in the user interface. Main characteristics excuse me, of the dashboard are that it has to contain all the information related to the permission, for example, the name of the payment service provider, purpose and validity of the permission. It needs to contain the possibility of the user to manage the permission, canceling or activating it, and it needs to keep a 2 years registry of all the permissions granted in connection with a payment account. Here it's important to highlight that the cooperation between the account manager service provider and the account service and payment initiation service provider is key to keep the dashboard up to date. And last, with regards to the mechanisms to supervise fraud, regulation is focused in tracking on monitoring frauds, particularly in connection with strong customer authentication measures. However, these are not yet detailed on how those measures will need to be implemented by the service providers. So we will need to wait until the final draft, and also to what the regulatory technical standards say about that. So in summary, if you need to give an idea of technical news to be implemented thanks to PSD3 and PSR1, please remember that the specific APIs for account service and payment service provided data interchange, the permission dashboard for the users to manage and control permissions given in connection with its payment account, and a new mechanism to supervise and prevent fraud.
Thank you, Miguel. That's a lot of information in those pages. Appreciate it. Now we're going to transition to Robert Courtnidge, who's going to give an overview of many of the things that are on the horizon, imminent or a little further out, that should be affecting in this AML space. Robert?
Yeah, I'm going to talk a bit about the UK, what we're doing there. Obviously, many businesses have one foot in the UK and one foot in Europe. And post-Brexit, that has caused many headaches, dual compliance teams, to name the least. But there is so much going on in the payment regulation space at the moment. Miguel kindly gave us a really good update on PSD3 and PSR, which is going to follow on from the PSD2. But obviously, in the UK, we're looking at the same things at the moment. I noticed Miguel talking about safeguarding. The FCA has just published a 230 odd page consultation on safeguarding. They want to change it because they feel it's not working. In the UK, we've already got different rules in relation to safeguarding, insofar as we created a new special administration regime to try and make sure that in the event of a e-money company or a payment services company going under, that the end users, the holders of the electronic money and the accounts with the payment service providers, would get their money out quicker. But even with that new regime, we're still finding years worth of delays, and we're still finding that a lot of the funds end up going to the insolvency practitioners rather than to the people that held the e-money with those institutions. And so they're not working. The new consultation and the suggestions, we've been consulting with our members across the UK, and we feel that the new changes are not going to do anything except add further compliance burdens on an already heavily compliantly burdened industry. So there is still a lot of debate to go on. In Europe as well, we have been waiting, in the UK, we've been waiting for the UK to come back on its consultations in relation to stable coins and crypto, because in Europe, you already have MiCA. So for those of you not quite as au fait on MiCA as others, MiCA is the effectively the markets in crypto assets regulations. They're establishing a comprehensive regulatory framework for crypto assets within the EU and aiming to provide legal certainty and protect investors, but at the same time fostering innovation in the cryptocurrency and blockchain sectors. They are the first, you in Europe are the first area to have such comprehensive regulatory frameworks put in place. And the UK is looking at MiCA to see how it can come up with its own version. But we have been 2 years in the waiting for anything. Two reasons for that. One is the UK has got this whole new area called the New Payments Vision. And the UK regulators were holding back on issuing any new regulation in the UK until the New Payments Vision was announced by the government, which only happened a few weeks ago. The reason for this is the New Payments Vision came out of a paper that was effectively done by HM Treasury through a guy called James Garner, ex-Nationwide Building Society, and many other places, looking at what the UK should do. He spent a number of months basically looking at all the regulation in the UK, speaking to the industry to try and work out what we needed to do to make the UK the ideal place for financial services businesses to stand. And it came out with this viewpoint that what we needed was a North Star and an ability to move forward. But because of that, the rest of the regulation in the UK was put on pause. And we were expecting the NPV to be issued in the first quarter of this year. But then we had a prime minister that decided to call a snap election in the UK. And because he's called the snap election, the publication of the new payments vision was delayed, and it finally came out in November this year. So now we are expecting a number of new regulations and consultations to come through. And the first of those was in relation to our response to MiCA. And the FCA has set out a time frame going up to 2026 to review the current position, take industry views, and publish our equivalent. The industry in the UK does feel that that is a bit slow, but equally we do recognise there's a lot to be done. The concerns we have is the US is moving faster. Now we have a Trump administration coming in on the whole area of crypto and stablecoin regulation, and we may be left behind in the UK. But that doesn't reduce the amount of new regulations we're expecting to see coming in here. Just to give you a view on MiCA, it classifies all the different types of crypto assets, including utility tokens, stablecoins, asset reference tokens, and others, and they then have different regulatory obligations on them. There are requirements on issuers of crypto assets to meet stringent transparency and reporting standards. And that includes creating white papers detailing risks, rights, technical details on the stablecoin. The stablecoin regulations themselves are going to look at what reserves you need to be held and where those reserves need to be held and at what point a systemic risk occurs. And then, of course, consumer protection. MiCA includes provisions for consumer protection, including clear rules on disclosure, transparency, and the prevention of market manipulation, which is obviously a big issue with many, many pump and dump schemes going on and consumers being affected by that. These things require this whole industry to deal with white paper preparation, creating governance frameworks, and creating compliance programs, none of which exist in that market at the moment. The other thing to bear in mind is that there is a divergence now because of Brexit and the fact that UK are putting our own regulations in. There is a regulatory arbitrage that can be managed. So on the one hand, a lot of our financial institutions in the UK would like to have more sort of harmonization with Europe so that they can work more easily across border. However, at the same time, there is a drive by the UK for growth and to diverge to give the UK being the landing space for companies coming into Europe so that they can have better laws than Europe. And so this is causing some frictions. But again, what it means is you have two sets of compliance, slightly different sets of regulation, because we're no longer implementing EU regulation. And we have divergence. So another area of divergence was we changed our we set up a whole regime to require financial promotions regulations to include crypto, which is now following through in Europe, but hasn't come through yet. But it means that in the UK, crypto businesses can no longer put up websites that are accessible in the UK. They can no longer market. They can no longer have social media people going out there saying you need to buy this new crypto token, unless those websites and promotions are approved by an approved person, which can be someone that has signed up to the UK's crypto register, which means that the FCA hasn't approved them, but it's effectively given them registration to say that they are allowed to do those promotions in the UK. That is a very sort of high bar that the UK set for that. And only, I think, in five years, only about 47 businesses have actually managed to get through all the hoops to become registered. And that's a little bit like the European registration for MiCA that is going to be coming through in the next year or so. Another area that is pummeling the UK but is different in Europe is authorized push payment fraud. Big issue. This is an area that's getting bigger and bigger each year. So as people move away from making payments with their cards and move to direct faster payments, and in Europe you have faster payments, in the UK we have faster payments, there is not the same structure behind a faster payment as there is in a card payment. So, for example, there is no chargeback regime. So the UK wanting to make financial firms more compliant and more protecting of consumers in this area, passed a new law, which was then developed by the payments systems regulator, who put new rules in on APP fraud. So if you're a member of Faster Payments, you have to sign up to these rules. And these new rules require a 50% sharing between the sending and receiving bank if an APP fraud has taken place. And that payout is within 5 days. And so it's taking a big burden onto receiving PSPs in this marketplace. And so suddenly there is for example, someone like a Revolut who is they're supposedly involved in about 30% of all APP frauds as a receiving PSP. That could mean an additional burden on their bottom line of over 100 million in reimbursements, where they have to pay the 50% reimbursement. That is a big burden on the bottom line of any company, especially if you are a new bank in the UK, which Revolut is. So these new rules are coming through, and we just the UK is continually bringing out new consultations, new rules, and increasing the compliance burden on financial service regulated firms in the UK. I could go on forever, but I'm not quite sure how much more time I am allowed on this. I didn't get a chance to take you through DORA, which is the new financial entities in the UK have to be able to withstand. Oh, we have a slide on DORA. Yeah. This is a massive requirement to digital operational resilience. Particular focus on IT systems and digital resilience for for all businesses. But financial institutions must regularly conduct stress tests on their IT systems to evaluate their ability to withstand and recover from cyber attacks and other operational issues. There is a whole requirement on third-party risk management. So financial institutions are required to continuously monitor and the operational risks posed by third-party vendors, ensuring that their service levels and continuity align with the standards that DORA has set. And then, of course, the whole area of incident reporting, firms being required to notify regulators of significant operational incidents, including cybersecurity breaches, within set timelines. So this means that you need more stress testing built in to ensure operational resilience, much more vendor risk monitoring, and of course, a whole incident response plan. These things, again, add to the administrative burden on firms in Europe. And of course, the UK is going to be creating its own one, which will be slightly different. So these are the types of things that are going on. Happy to answer any questions as we move forward. As I say, the final thing is MLD6, which is the sixth anti-money laundering directive in Europe, and that one is expanding its scope to deal with virtual assets. So, like the UK has expanded it about 5 years ago, now in Europe we're going to have AMLD6, which will expand the scope of anti-money laundering into the virtual assets realm as well. So they will require enhanced due diligence, beneficial ownership transparency, and of course the whole whistleblowing protection that is in financial services firms, that is going to move across into crypto firms as well. So I will leave it there for fear of running out of time. But yeah, happy to take any questions at the end. Back to you, Robert Daniels.
Yeah. Thank you, Robert. That's a dizzying amount of things going on. Another example of why if companies have to stay current, know what's coming up, be proactive, looking at your people, your process technology, keeping up to maintain compliance with all these things that are constantly changing, which is a good segue to Michaela, who is going to really go into the practical and tactical side of this. Okay, all this is going on. How do you build solutions to maintain compliance?
Robert and Robert and Miguel. So maybe just a little context on Amadeus, so you understand why this is such a challenge for us. Amadeus is a global technology company providing solutions for the travel and tourism industry, now including payment solutions through Outpace. And Amadeus was first established as a global distribution system, or GDS, but now has a wide range of technology and solutions, including, as I mentioned, payments. We are publicly listed in Spain, so a European company, but we have a presence and are active in more than 190 countries, so small activities. And as you can imagine, we're keeping a really close eye on regulatory developments around the world across jurisdictions. So as a European company, we're subject to the EU very complex regulatory web, but of course we have to watch the UK and all of the other jurisdictions where we're active, and depending on the product line, there may be different regulatory obligations. So a really complex web. And we also want to keep an eye on regulations that can impact our customers and our partners, because we need to keep an eye on the entire ecosystem and be staying ahead of potential requests from customers or changes to our products that may be impacted by their regulatory obligations. So as I think all in-house counsel are familiar, and particularly in the financial sector, we have to do a lot with a little. We have really great experts like Miguel in-house, but we are only so many people and there's only so much we can do to keep an eye on things. So we tried to get creative, and this is how we ended up partnering with LexisNexis and Integreon. We were looking for a way to scan the regulatory landscape and know what's coming, so what's proposed, and do we need to do some influencing and keep an eye and make sure that regulations are appropriately tailored from the start before they're introduced. And then as the regulations are coming down the pipeline, if we're looking at drafts, can we start to plan for implementation? Can we be prepared so that when these obligations come into place, we're ahead of the game and not having to rush or looking at potential fines or risks of non-compliance, but really keeping our solutions cutting edge. So we can't have local counsel on retainer in every country where we're operating, and nor can we have detailed memos on every new regulation that's coming. But we needed a way to pick up these new obligations and assess them quickly and efficiently. So this is where this regulatory radar idea came into play. We actually looked at a lot of different potential providers, and we landed on Integreon with LexisNexis, because this seemed like a really efficient solution, but that could also be tailored for the way we work. And so the way this works is that the LexisNexis newsfeed is fed into Integreon systems, and they also scan a select regulatory sources and other sources that, including sources that we previously monitored manually, but now they're doing that scanning in a more automated way, pulling into the funnel all of those different news sources and regulatory alerts, and then filtering them for those that are most likely to be relevant for Amadeus in particular areas and for the jurisdictions that we've selected as our priorities. The beauty of this is that we can change those the jurisdictions or the regulatory areas, or of course expand as things become more complex, without removing those relevance filters, that we continue to train the machine learning to filter down to what we're looking at. But then with the really wonderful Integreon team that we've worked with, they get to know our business and our product lines and can provide some initial steer on what's most likely to be relevant and most impactful for us. So through this process, we found that we're able to be ahead of regulatory developments and have our ear to the ground on a lot more jurisdictions than we were previously able to with our limited resources, and be more prepared. So working with our external affairs team to engage with regulators early, not finding out about regulations after they've already come into effect. And then working with our product and development teams to think about how these regulations are going to impact us, whether we need to think about changes to our pipeline or updates, and then harmonization, right? Working with the different regulators to alert them to changes around the globe and the need to think about harmonizing regulation to reduce the burden and increase regulatory certainty for companies so that we can work more efficiently and continue to innovate, focus our energy there. So all that to say, we've been really thrilled with this partnership. I think it's been a good way for us to find out about regulatory developments early on. And we're excited to see how it continues to evolve. We're about a year into the project and really hoping that it will continue to go onward. So happy to answer any questions or talk more about that.
Thank you, Mikkel. Again, a practical, tactical way of staying current, knowing what's coming, and being prepared before it hits you. We've got about 10-15 minutes left. We've got some great panelists here. So if any of our people would like to ask questions, please do. You can also put something in the chat if you have a question there as well. Well, we don't have any questions. Just like to thank everyone for attending today. And Dad, I have one thought there, Mikkel. How much of your time did it take to work with LexisNexis and Integreon to develop this process?
I would say there was some setup time, as always, when we're implementing a new process, but in general, it was quite a quick for how big the scope of this is, right? The number of regulatory areas that we're covering, the number of jurisdictions. And I think that what was most impressive is how agile the team was in adapting as we make changes. So I would say quite a bit of time investment from the Integreon LexisNexis teams and from our teams to get set up to train. But then it's been a continuous learning process and become more efficient over time, which is what we hope to see.
Great, thanks. Do we have any more questions? Yeah, quick overview of LexisNexis and our capabilities in this area and how we're helping our clients in the EU and UK to comply and stay current, stay ahead of a lot of these issues. The dizzying amount of things that are in flight in the UK and Europe it's amazing what's going on in the constant change. So we're here to help. Let us know if we can help you in any way. And thank you for attending the webinar today. We appreciate it.